A reporter from the Wall Street Journal investigating complaints from Activision employees said the company's chief executive was spinning at the time of his dismissal. When Microsoft announced last week it was buying Activision, two explanations emerged. The first, pushed by Activision and its CEO Bobby Kotick, was that the company needed a tech giant like Microsoft to provide engineering resources to compete in the future of gaming. The other version, as reported by the Wall Street Journal, was that Activision's board pushed Kotick to sell. Its stock had fallen 20% after the publication detailed the company's culture of harassment and alleged that Kotick had withheld information about it from directors. Kirsten Grind, one of the authors of those WSJ reports, spoke about all this with me and Eric Newcomer on a recent episode of our Dead Cat Tech podcast with guest host Katie Benner. Grind said Kotick's version of the story doesn't track with his emotional connection to Activision. The CEO, she said, viewed the company as his child and wasn't likely to give it up, even for $69 billion. Just keep reminding yourself how much Bobby loved this company. And Microsoft had been in before. And he never wanted to sell to them, he never wanted to sell them, she told us. The Journal previously reported that under Kotick, Activision fostered a culture rife with harassment and gender discrimination. Already, employee claims had triggered investigations from California regulators and the SEC. Among the findings in the article was that Kotick got in a mail about an employee who alleged she had been raped by her supervisor. Although Activision settled with the employee, Kotick did not tell the company's board, the WSJ reported. Other allegations in the piece included a former assistant who said Kotick harassed her and sent a voicemail where he threatened to kill her. Activision denied many of the allegations, saying Kotick had properly informed the board and that the CEO was not personally aware of many of the claims employees made. Still, Grind said it was important to keep in mind that Kotick was a very hands-on CEO. Her sources described his management style as knowing definitely everything that's going on across this company, she said. Following the Journal's report in November, Activision's stock slumped. That was after an already dramatic drop after news of the government investigations earlier came out. The company's board was growing anxious for an out, which spurred Kotick to reach out to Microsoft as head of gaming Phil Spencer, the WSJ reported. Of course, Microsoft itself was partly the reason for the stock's woes. Following the Journal's report, Spencer had told Microsoft employees it was evaluating its relationship with the company, even though Microsoft agreed to pay a 45% premium on Activision's share price. Many have argued it was still a good deal for the tech giant given how much the gaming company's stock had already fallen. And it may have been an even better deal for Kotick. Grind told us that a lot of Activision employees really wanted the CEO to resign. They felt like he should have his walk of shame, basically. And they did get that, she said.